Good day, Junior Tickies. I'm Mrs. Brimacombe, and we are going to look at Fixed Asset Activity 6. The information provided was extracted from the financial records of Blue Balloons Partners for the year ended 28 February 2021. So we're now going to look at each question individually. Starting with question 6.1, we need to calculate the missing figures. By looking at the tangible asset note, they provided us with land and buildings and equipment. To find out missing figures, we need to refer to the additional information. So what does it tell me? Depreciation on equipment is calculated at 10% per annum, diminishing balance method. Equipment was purchased on the 1st of December 2020, and an extract from the fixed asset register was given to you on the equipment sold. So going through this now, it's important to take note of the following with regards to equipment. There's additions and there were disposals. So it means that when we're calculating depreciation, it must be calculated on the new, the old, plus that which we sold. So now we're going to start with the question by looking at number 1, finding out the carrying value at the end of the year. Now this should be relatively easy to get. Why? Because if we look at land and buildings, the cost in the beginning plus additions equals the cost at the end. But now they ask you to calculate the carrying value. You should know that the carrying value is equal to the cost. Why? We do not calculate depreciation on land and buildings. So we're simply going to say 4 million plus 570,000. Looking now at equipment. To find out the additions at cost, do not take the balance in the beginning minus the balance at the end. Why? Because there were disposal as well. So how do I solve this? We can open up a T account and we start with filling in the information which was given to us. We have the opening balance, 576,000, plus additions will always appear on the debit side, but now we don't have the additions. That's what we need to solve. We do have the cost on the asset which we've disposed of in the fixed asset register. So we're going to say on the credit side, asset disposal, 132,000. Remember, you do not need to write details. This is only your workings. Then we have the balance at the end, 564,000. So to find out the additions, we're going to take the credit side minus the debit side. The balancing figure, 120,000, is my additions at cost. Again, I'm going to say the following. When you get a question like this, you can open up a T account. Just make sure that the amounts appear on the correct side of the account. You do not need to write any details because this is just your workings. It's a tool. The T account is a tool, a method you can use. So if we now look at disposal at carrying value, disposal at carrying value is always at book value. So how do we approach this? We need to actually complete the fixed asset register to find the carrying value at the end of the year. So when we look at the cost, it amounts to 132,000. The total accumulated depreciation must be calculated. So how do we calculate it? By looking at the fixed asset register. The depreciation was calculated for the year ended 28 February 2019. So now we need to calculate this for 28 February 2020 and then until the day that we've sold it, which is on 30 September 2020. So starting with 28 February 2020, we need to use the book value because it's calculated diminishing balance method. This is why we take 118,800 times 10%. That provides us with the depreciation. To get the book value, we have two options. We can take cost minus the total accumulated depreciation, or we can take the book value, the carrying value, minus the depreciation. For 30 September 2020, we must calculate from the beginning of the accounting period until the day that we've sold it. That's equal to 7 months. So my depreciation is 6,237, and to calculate the book value, we take the previous year, which is 106,920, and we minus the depreciation of the current year, 6,237. So my total accumulated depreciation is 31,317. Cost minus total accumulate equals the book value. If you completed your fixed asset register, you could also get the carrying value on the fixed asset register. Looking at the last one, what is the total depreciation for the year? Start with the one that you've just calculated in the previous question and make sure you use exactly the same figure. The depreciation on the asset we disposed of was calculated 6,237. So you don't need to calculate it again. You've calculated it in number 3. To calculate depreciation on the new, it's from the day we purchase it until the end of the accounting period. So if we purchase it on the 1st of December, we have to calculate it for 3 months. On the remaining or the old, we take the book value in the beginning, which is given to us, 126,000, and we minus the book value on the asset which we disposed of. But be very careful, not the balance at the end, but the balance in the beginning, before we updated the depreciation. Be very careful, and this is why I've pointed it out. So my total depreciation for this accounting period is what we sold plus the new plus the remaining, and that equals the total depreciation. Question 6.2. Give one suggestion that the internal auditor can use to check whether movable fixed assets have been stolen. So how do we know if there's any of our fixed assets missing? So the first thing is conduct a physical inspection. Go physically and check what is our movable fixed assets that we have. Secondly, compare to the fixed asset register. Remember that a fixed asset register is a register of all of our assets, individually recorded. Question 6.3. Land and buildings were bought 5 years ago for 1.2 million. Since property prices have increased by 20% since then, Partner Joe suggested that the value of this asset be recorded at a higher amount so that a profit of 500,000 can be reflected on the income statement. Partner Gerald disagrees. Provide one point why you would agree with Partner Gerald. So I'm going to give you more than one option in what you can answer to this question. First of all, the GARP principle, historical cost, prescribes that when we record assets, it's only recognizing profits and losses on disposal. That's why when we do asset disposal, we calculate if there were a profit on the sale of the asset or if there were a loss on the sale of the asset. Secondly, IFRS, which stands for International Financial Reporting Standards, which you will learn more about in grade 12, provides for fair value provided that the estimate can be measured reliably. Thirdly, financial statements must not be overstated to give a false impression on the profitability of the business. Then we can also mention, if we look at a partnership, the partner's current account will be inflated with non-cash items, which will not be a true reflection of what their net worth is. Thank you very much. I hope that you've enjoyed this video on fixed assets and that you've learned a lot. In our last activity, in activity 7, we are going to focus on problem solving. I want to leave you with this quote: "You were born to win, but to be a winner, you must plan to win, prepare to win, and expect to win." I hope you have a wonderful day.